In this video, I want to talk about how professional option traders open positions with a big account size. It's really important because most of the mistakes are usually technical. So we'll go over the exact process that I use, some live examples. And my name is Eli. I'm a professional option trader. So let's get right into the video. So the new position opening process is very simple. First of all, I will open the position on a paper/demo account. I use an interactive brokers account, so it provides only market fills for demo accounts, which is basically the worst possible fill you can get on a position. So this is really important. So if you use any other broker, some of them don't really provide you the market fill. They usually give you the mid-price fill, which is not always realistic to be able to get. Right, so this is why I use interactive brokers specifically. They give me the worst possible fill on this position, and then if the position or positions open at a -8% of credit or less, it is considered good. If it is worse than -8% of credit at the open, it means the bid and ask spread is too wide and liquidity might be low. Now, if everything is okay, then step 2 is I open one contract on a live account. And not as a market order. I obviously go for the mid price, for the best possible price. And this way I make sure there's no technical mistakes that were made and the position is filled for a fair mid price. Then if everything is fine, I go to step number 3 and I open the rest of the contracts to achieve the full position size. Now, step number 2 is not a must. However, it adds another layer of protection from human error. And if you're trading with a pretty big portfolio, something basically anything over 100,000 I would consider big enough to be able to go through this process and get used to it. Some people don't do it. I trade with over $8 million, so I think it's pretty crucial for me to make sure I'm opening the position for the best possible price and there's no liquidity issues and no other issues. So this is basically the process. Let's go and look at a live example on a demo account. Because this is actually the most important part of this whole process. So we are looking at a crude oil option chain. So let me show you what a good fill price looks like and what a bad one looks like. So this is a demo account. So let's just go ahead and sell a triangle just outside the expected move. And on a demo account, it doesn't matter what you put for the mid price. Yeah, at the end of the day, you can only ever get the ask price. So when you sell an option, it will be the ask price. But I just put it on the market because I want to be able to see what is the worst possible fill this position can get, and therefore I know I can have an idea what is the fill price I can get on an actual live account. So the order was filled. So this position was open and it's immediately down 1.6%, which is remarkable. It means the bid and ask spread is really tight. Right, so this is the worst possible fill that we can get, and we're down minus 1.6%. Usually with futures options, you are going to open a position down 2 to 3, maybe even 4% due to the bid and ask spread and some fees, of course, with interactive and most brokers actually. So this is a really good fill price. So if we open it on a live account, we can expect to open it down 1%, maybe even better than that, right? So it's usually half of what you see here. So if this position would have been opened down 2% in real life or with an actual live account, you would probably open a position down 1%. This is usually how it works, not all the time, but let's, for example, look at something that might not look so good. So let's go to copper. Go to whatever December, and I will go, let's see here, let's go to 7 days to expiration, and I will purposely go to something, let's see if we can go to something like this here. This is also a triangle. So let's see, so we have the mid price, but again we are going to go for the market price, and let's see what kind of fill price we can get here. Let's see. So here we open a copper position, it's down 3%, which is also not bad. Again, up to down 8%. This is a pretty good deal that you're getting. Let's try and find something that is not really liquid. Let's try silver, for example. Usually copper with 7 days to expiration is not going to be that liquid, but Obviously, in this case, it is very liquid. So let's try something else. Let's see here. Maybe we can get, or we can actually try coffee futures. This one should have a pretty wide bid and ask spread. So let's see, coffee. So this one is actually pretty good. Well, I'm in a pretty liquid time frame right now. So let's try maybe lean hogs. But usually everything that I open, I know is pretty liquid. So this one's going to be not as liquid. So we can see there's already a pretty big spread. So let's try and sell as triangle. And see, this is a pretty big difference. So let's go to the market, submit. And the position should get filled. And we can see the position is opened down 18% right away. So this is not something that I would go ahead and even consider opening on a real account, on a real life account, right? This is way too much, down 18%, and this is not supposed to be like this. I'm looking at down 8% at the very, very worst case, and ideally not even get to down 8% on a demo account on a market order. Now, when I do end up opening the actual position in real life, I would obviously not choose to open it at a market price. I would definitely go for the mid price and then submit the order. But this is basically the process on the demo account. On the live account, I think it's pretty self-explanatory. So I'm not going to open any positions on a live account. So if you have any questions, let me know. I think this was pretty simple, but very, very helpful. You'll be surprised how many positions you can, or how many situations you can save up for yourself because of this little technical bottleneck, which clearly shouldn't be a big issue, but it is. Unfortunately, it's real life, especially as your account is going to get bigger and bigger. It's going to become more and more of an important thing to kind of follow and be as your second nature. Thank you so much. If you have any questions, let me know, and I will catch you in the next one.